Silver's technical setup and run ultimately to 50 is going to be biggest technical breakouts of history for any asset class, just because it has been so incredibly long that silver was at the nominal $50 level back in 1980. So a lot to look forward to. First, not that much resistance on the way to 50, and then after that, uncharted waters. I mean, there's no real clear technical upside after that. We've never been truly above 50 for any kind of sustained time. So it's going to be really exciting times. Looking forward to getting there and beyond.
Silver prices have surged to their highest levels since December 2012, driven by strong industrial demand and expectations of Federal Reserve interest rate cuts. This rise follows a significant breakout in gold in March, when gold closed above a key 13-year resistance level at $2,100. By the end of May, silver prices on the COMEX closed above a crucial 12-year resistance at $30. The upward trend in silver continues to lead gold higher, reflecting a classic bull market for precious metals. With silver's recent close above long-term resistance at $30, both metals are expected to continue rising, albeit with some periods of consolidation. Both gold and silver have now broken through major technical resistance levels, setting the stage for further gains. However, silver prices have seen some volatility. They dropped from daily highs of around 32.9, even as U.S. Treasury bond yields fell. A late recovery of the U.S. dollar, which trimmed some of its losses, put pressure on silver, causing it to drop over 2.80%. According to Peter Krauth, dips below $30 offer investors a strategic opportunity to increase their silver holdings. Silver has demonstrated resilience by breaking through previous resistance points since the pandemic began. Looking ahead, Peter anticipates that the next major resistance level for silver is around $50. Historically, reaching this level has been challenging, as seen in 2011 when many investors who bought at $50 looked to sell. Despite this potential resistance, the path from $30 to $50 appears relatively clear, with only a few minor obstacles. Once silver breaks through the $50 barrier convincingly, Peter asserts it will enter uncharted territory with no historical resistance to limit its potential rise. We will present clips from Peter Krauth's interview with Liberty and Finance. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
I would not be surprised as we work our way through the summer that we could, and I'm not saying this has to happen, I'm saying we could see some kind of a pullback, sort of a reckoning, a digesting of these gains, that because silver's up about 45% since the late February lows. That's just tremendous. It's up about 35% since the year started. That's about almost triple what gold is up. So that's fast and furious. I think we could see some kind of a digesting phase, consolidation, where silver will perhaps test somewhere below 30. My first target would be 28. If we really got a washout, perhaps 26. But I think that 30 is before long going to start to become a new floor. I've been pretty impressed with how resilient silver has been over the $30 mark, and retesting 32 in the last few days again. So again, if you don't feel like you're exposed enough to silver, and you see it somewhere below 30, I'd say it makes good sense to probably start at least nibbling at it and increasing a position, or starting a new position if someone doesn't have any exposure, and build on that. And as I say, it's kind of like the mining stocks: buy in tranches at least, and mitigate your risk. Do what's called dollar cost averaging. But this is a bargain, there's no question. And if you look at, as I say, the pricing in China, for example, up to $4 more per ounce, then people in the West certainly have access to a bargain right now, whether silver is above 30 or not. There's actually very little resistance from once 30 has been clearly established as a new floor. There's not really, there are a few stops along the way, to be fair, but I think that you look at technically, and going back to 1980, the first time it reached that level, there really is little to no resistance between here and $50. I would absolutely expect, like you said, that we're going to see that tested a few times before actually finally breaking through, like we did 30. In the last 4 years, silver tested 33 times before just breaking out now. So the first time was in August of 2020, right after the pandemic hit, and silver went from, say, $12 to $30, about 140% return in 5 months. Then, and the silver squeeze, which was the end of January in 2021, it also ran up to about $29 or so. So the third time was just in the last month or so when it tested 30 and then just sailed through it. This was, I think, right around a couple of weeks ago in the middle of May. And so really looking quite strong right now. And there's some great work by a friend and colleague, Jordan Roy Byrne, who does some fantastic technical analysis. And he's basically said that this is one of the, silver's technical setup and run ultimately to 50 is going to be one of the biggest technical breakouts of history for any asset class, just because it has been so incredibly long that silver was at the nominal $50 level back in 1980. So a lot to look forward to,
Renowned analyst Peter highlights that silver supplies are dwindling, with significant declines in above-ground stocks across major futures exchanges like COMEX, LBMA, the Shanghai Futures Exchange, and global silver ETFs. Private holdings are not meeting current market demand, indicating that higher prices are needed to release these stocks. A notable price disparity between China and the U.S. underscores this trend, with spot silver prices in China commanding a $3 to $4 premium per ounce over U.S. prices, reflecting stronger demand for physical silver in China. This shift in pricing power from the West to the East benefits silver investors, signaling robust demand and the potential for price increases. China remains a significant player in silver demand, controlling over 80% of solar panel manufacturing. With the country's ongoing expansion of solar energy infrastructure, Chinese silver imports are expected to surge as traders capitalize on the heightened demand, driving prices well above the international market. India is also rapidly emerging as a major force in silver demand. In the first 4 months of 2024, India's silver imports surpassed the total for all of 2023. This surge is driven by increased demand for solar panels and growing investor interest. Peter asserts that this significant increase in demand supports global silver prices and even outpaces gold, highlighting silver's growing appeal.
And if you look at what's been happening with with spot silver prices in China in particular, they're trading at $3 to $4 per ounce above what they're trading at in the U.S., for example. So it tells you that where the demand is for true physical silver, taking delivery of physical silver, because the Shanghai Exchange is a physical futures market. You have to have an ounce there. You have to have a bar there for what for your contract, to back the contract. And so people are buying silver off of that exchange, taking delivery, and they're prepared to pay to three to $4 higher. I feel that's a much better representation of true silver price. And I think that we're going to continue to see pricing power shift from west to east. And ultimately, that's going to be good for silver investors. The demand factor is China. They control 80% of solar panel manufacturing or more. And that's been growing by leaps and bounds. Demand for silver from solar was up 64% last year alone. Solar now represents 20% of the entire silver market. Big news out of India, really. They are working on building the world's largest renewable energy park. This is in Gujarat state in India. It's going to be 5 times the size of Paris. In February alone, silver imports to India represented about 2/3 of 2023's imports, so 1 month. And now we have news that already in the first 4 months of this year, imports into India have surpassed all of last year's imports. So India, despite sort of overall sort of smaller numbers in terms of silver demand versus China, is really quickly becoming a force to contend with. And I think that we need to start paying attention to what's going on there.
The silver market shows potential for significant growth despite its inherent volatility. After a brief pullback, silver rallied, signaling attempts to break above the 3250 level. Historically, once silver surpasses the $30 mark, it often experiences strong upward momentum. If it breaks above $30.60, a move to $33 seems likely. Given this pattern, any pullbacks could be seen as buying opportunities, suggesting a bullish outlook for silver in the near future. However, due to its volatility, cautious position sizing remains crucial. Share your thoughts on Peter's prediction in the comments section below. Also, make sure to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.